Good morning, Sam Tenpenny with Tri-State Livestock News, the Fence Post, and Farmer and Rancher Exchange with your Tuesday morning headlines concerning fair cattle markets. The Western Reporter reported Canadian imports of live cattle are 277,290 heads so far this year, 1.9% higher than last year's total, as American cattle continue to fill Western Canadian feedlots and support processors at a record pace. Jason Wood, Alberta's livestock market analyst, said that there has been no growth in the Canadian beef herd the last few years and that American cattle naturally fill that void. Wood said that typically Alberta receives about 54% of the total imports, but this year that number is up to 62%, having already imported 9.9% over last year, thanks to 41,200 new and additional pen spaces and the feeding advantage that Canada had for a large part of the year when corn was more expensive than barley. However, that has reversed, and corn now has the advantage as processing plants are operating near capacity to meet strong demand, which in turn drives demand for fed cattle. Wood said the utilization rate this year at Western Canadian federally inspected plants is 97.7%, which is much higher than the 5-year average of 86%. For the week ending October 9th alone, Western Canadian slaughter was 2 million head, a number up 11.7% over last year, nearly 5% from 2019, and 14% higher than the 5-year average. Year to date and total Canadian production are also up 12% and 10.8% from 2020 respectively, both more than 14% higher than their 5-year average. In a published report, Wood said that increased production has pushed Alberta's beef exports to just over 250,000 tons, worth nearly $2.2 billion, up 38.4% by value and 25.5% by volume compared to the January to August period last year. And compared to 2019, the numbers are 37.6% and 15% higher. That said, beef imports are down nationally, 223,787 tons, a drop of 19.2% from 2020 and 13% lower than the 5-year average, but Wood expressed that increased beef exports and lower imports are a good sign of strong demand for beef cattle and overall support for the sector, and that continued strong demand further supports the imports of live cattle. According to DTN, the last time the cash cattle market traded at or above 130 was back in June of 2017. So for the last 4 years, feedlots have slowly grown accustomed to believing that 130 might be unattainable. Unattainable because the market's fundamentals didn't support that price threshold, or because packers didn't need cattle, because there was a backlog of cattle, and eventually because who was actually believing that fat cattle would trade above 130. Over time, it's not a matter of what's factual or true, of what an asset is truly worth or what it's perceived to be worth, but it's what we feed ourselves mentally that eventually becomes the norm. And that's why last week's victory of successfully trading cash cattle for 130 is such a milestone. There were analysts who didn't believe that the market would trade at that number simply because of the psychological barriers the market had developed. Last week's cash cattle trade saw a few pens of cattle move on Tuesday, but it wasn't until Friday that the standoff between packers and feedlots really shook out. Last week, Southern live cattle traded for 126 to 130, mostly at that 128 to 130, which is 2 to 5 higher from the previous week, with Northern dress cattle trading from $200 to $206, mostly 202 to 204, which is also $2 to $4 higher than the week before. Last week's negotiated cash cattle trade totaled 96,867 head, 90% of which was scheduled for nearby delivery, while the remaining 10% were scheduled for deferred delivery in the following 15 to 30 days. Heading into this week's trade, it's fair to believe that the cash cattle market stands a strong chance at demanding higher prices once again. How packers committed to the cattle they bought last week is extremely telling. So as long as box beef prices stay rewarding, the packers should want to keep processing speeds elevated, meaning that feedlots stand a chance to gain more leverage this week. Because the mental obstacle of 130 has been overcome, and because the market's technical and fundamental windshield is supporting this rally, cattlemen are finding themselves taking over the driver's seat in this market. Drovers reported that a South Dakota feedlot operator who pleaded guilty to operating a Ponzi cattle scheme was sentenced to nearly 8 years in federal prison on Thursday. Robert Blum of Corsica entered a guilty plea in August to what prosecutors said was a scheme to resell the same cattle to multiple investors, making a profit of about $24 million between 2014 and 2019. After a federal indictment in March 2020 detailed about $10 million in funds related to his feedlot business, prosecutors said he altered purchasing documents, leading investors to believe that his feedlot was more successful than it actually was. He also sold the same groups of cattle to multiple buyers and used that money to pay back previous investors. A civil foreclosure case against Blum remains ongoing, with more than 70 parties claiming that they are owed money. Blome was sentenced to 91 months in prison Thursday on charges of wire fraud and money laundering, while 30 other counts were dropped as part of a plea bargain. Judge Karen Schreiner said that Blome should have known what he was doing was wrong after facing charges back in 1997 for getting a bank loan after lying about cattle that he didn't own. Blome received probation at that time, but asked the judge last week for mercy as his defense lawyer painted a picture of a stressed out farmer who was only trying to save his family farm. According to the Western Ag Reporter, an agreement was recently made that would end a Section 232 tariff dispute between the United States and the European Union, which American Farm Bureau Federation President Zippy Duvall is calling welcome news for American farmers. While the dispute centered around steel and aluminum, farmers were swept up in the turmoil as the European Union clamped down on U.S. ag exports. Duvall commented on the need for stable and predictable trade agreements to grow exports, particularly as American farmers recover from impacts of the pandemic. Until next time, I'm Sam Tenpenny, and this is your Fair Cattle Market Update.